Good morning, you're very welcome to our Mums at Work event, and we have Ciara here from Accounts by Ciara, and she's going to share with you what not to do. And this is specifically for small business owners and sole traders, but could really apply to anybody. And Ciara, you're very welcome here today.
Thanks, Sinead, and hi everyone. I guess this is mostly aimed at those who are starting out, but it probably, from experience, anybody it'll probably apply to as well, whether you've gone a couple of years or 5 years. So it's worth having a wee watch just to see. At the very start or at any time, it's really easy to make mistakes. You're having to juggle so many balls. I mean, we're having to do it here. You've got your social media, you've got your account, you've got sales, you've got staff, all of those things. And a lot of the time you're having to juggle so much in areas that you don't have much experience in. And whilst some of those areas could be easily fixed if you make a mistake, quite often in accounts and tax can be costly mistakes and they can be quite hard to repair without help. So you need to learn, if you're going to try and do it yourself, learn as much as possible from as many sources as you can, and make sure you've got someone on hand that you feel comfortable asking questions if you're unsure. So whether that's someone on like a retainer fee, or that you know that you can pay a wee one-off fee, or go along to a bit of training. So if we just have a look at some of the mistakes to avoid, so what not to do when starting out in business. So don't be taking advice off someone who's not qualified without asking for a second opinion. And the main reason for that is just quite a lot of time they may have been given that advice because it was based on their business and their circumstances, so based on their household income and things, and it might not apply to yours. So whilst it's been given in good faith and to try and help you out, it might not actually be the right advice for you. Don't be registering for self-assessment and thinking that that's it. There can often be other steps in making sure that you're registered to submit a self-assessment. So don't be kind of just registering, putting the post into a wee drawer and not looking at it again. Read the letters that come through the door and make sure you're following what other steps that HMRC recommend that you should be doing. Don't be dismissing the idea of a bookkeeper or accountant to save costs. So work out whether you can do it properly in a reasonable amount of time yourself, or whether it's more efficient to outsource. So working out your hourly rate that you charge your clients, how many hours a month that you're spending on your accounts doing it properly. So not leaving it all to the end of the year, but actually if you had to take the time properly, whether that would be more efficient for you to outsource to somebody for some help. Not pricing too cheaply at the start or giving discounts. I know this from personal experience at the very start, where you come in with sort of cheaper deals or give a bit of a discount at the very start, and it can be quite hard to come back from that. So know from the start what your value is, or what income you need to cover your costs and your time, and go from there. And if you are offering any discounts or coming in an introductory rate, have a really tight boundary on those, how many you're going to apply that to, and when you're going to stop that discount so that you can start to make money for yourself. One of the biggest mistakes that we've seen people do is once they register for self-assessment, they also register for VAT or registered employer just in case they might need it. But once you register for those services, HMRC will be on your back, and so it can be one of the biggest mistakes that you do. So don't be registering for those just in case you might, or something you might think about in the future. Make sure you get proper advice on that. And when preparing your self-assessment, biggest thing, don't leave it until the last minute. I actually, in my first year of self-employment, left my own to the last minute because I was so busy doing everyone else's, and you can be sure that every technology failure will come upon you on the 31st of January. You'll not be able to get logged in, you'll not be able to access files. So you can submit your self-assessment anytime after the 6th of April, and I would recommend getting it done as early as possible. Just don't be putting it off. It's always, everything's fresher in your mind at that point. Sinead's very good at doing her self-assessment very quickly, so she can advise on that too. We've seen a lot of this in the last year. A lot of time when people set up as self-employed, they make that their biggest goal is to make that their tax bill is low, and that has come back to bite so many people during COVID because they haven't been entitled to grants. It's also, whenever you're applying for things like mortgages, car finance, any of those things, and you have to show 2-3 years worth of accounts, the banks don't appreciate a low tax bill. They want to see your higher profits, that you're entitled to any of those finance agreements. The next couple are mistakes that we have seen from some of our clients who have been trying to do things themselves. So loan repayments and credit card payments aren't an expense to your business, so don't class them. You can't put them in there to to lower your profit. You can claim the interest part as an expense. So that's been quite a costly mistake for some of our clients, and having to rectify that in future years. So if you think about it, the loan repayment or the credit card repayment, you're paying back for stuff that you've already bought, and you've probably put that expense through in a previous year's set of accounts or things. So you can't put that repayment in as an expense. And this is one, just not necessarily a self-employed person, but if you're a landlord renting out property, the mortgage interest can't be counted as an expense. So your profits worked out before that. A lot of people don't register for self-assessment when they're landlords because they think they're not making any profit by the time they pay their mortgage. And that's just not the case. So it's a mistake again that we've seen for a lot of people. So I thought I would put it in there. Just make sure you're keeping yourself right with HMRC. Next up then is I rewrote this 3 times, because I couldn't work out the right way to write it. So don't think that you don't need a receipt because you paid by debit card and it shows the name of the shop on your bank statement. And especially for fuel, a lot of people think because it says Tesco petrol filling station or BP or something like that, and they've paid by debit card, shows on their bank statement, that they don't need the receipt for that. But HMRC still want to see the receipt if they ever do an inspection, and they won't know by looking at your bank statement if you bought a scratch card at the till, you bought bread and milk on your way home, or any of those things. So keeping a receipt where possible for all of your expenses. You can get duplicate receipts from some of the bigger, like the Tesco's and things, that you can go to them and say that you spent £42 on such and such a date using this card number, and they can give you a duplicate, but it's always best to try and get it at the very start. And next then is regarding your income. So what we've seen a lot of people doing is if they collect payments from their customers through a card provider like Stripe, SumUp, anything like that, they count their income as what comes into their bank, when actually the income was the actual sale that you made. So your sale might have been £100, but into your bank is £98 because there was a £2 fee. And whilst it has the same effect on your tax bill, HMRC don't like it. They want to see that your sale was £100 and that you had a £2 fee to Stripe or SumUp. And their main reason for that is because if they want to see if you're getting anywhere near the VAT threshold, they want to see what your true sales were, not after you've paid Amazon fees and PayPal fees and Stripe fees and all of that. They want to see what your actual true sales were. And the last one I think on there, yep, the last one is drawings and take-home pay. The money that you take out of the business is an expense, isn't an expense. So again, we've seen some people putting that through as wages on self-assessments that they've done themselves, and then making that look as if their profit was lower, unknowingly, not knowing that that wasn't the right thing to do. So if then their tax bill was lower. HMRC don't care what you take out of the business. Your profit is your income minus your allowable expenses, so your day-to-day expenses, not less what you've taken home then at the end of the day. That's the main tips that I can give you, main mistakes that we find that some of our clients who have maybe tried to do it themselves have come across, or some mistakes that we've even come across in our own accounts that we've done. How we can help. We have 3 options there. You can join our free Facebook group, so it's available to anyone. You don't have to be any of our clients to do that. We'll post tips during the week, and we encourage you to ask questions that we will then send answers to. You can also promote your business through the group as well on certain days. We have a new course coming soon that I've wrote specifically for sole traders, covering the basics of what you need to do, what you need to be thinking of if you're trying to do it yourself, or if you have an advisor that you maybe have just at the end of the year, so you're still aware of all your obligations. So if you're interested in that, you can sign up to the waiting list and just drop us an email at info@accountsbyciara.co.uk. Alongside the course, we'll be running a membership group where you can, we'll be holding accountability sessions in there to make sure that you actually do the parts of the course that are relevant to you. We'll have question and answer sessions or more in-depth Zoom calls and things with guest speakers as well there for you to help out. And lastly, if you feel like you need some help with your accounts, that maybe you have been trying to do it yourself and you're feeling a bit overwhelmed, you can get in touch with us for a free discovery call to see if we can help. Again, just drop us an email, info@accountsbyciara.co.uk. And that's it for me. Thank you very much.
Thank you so much, Ciara. That was brilliant. And yes, I understand a lot of those mistakes because I probably made them myself in the first 2 years of 14 years of business, and that's why I do my accounts on the very first day that I'm allowed to, because I will not. I've been inspected 2 or 3 times by Revenue and Customs, and it's not very pleasant. So I would
No.
advise everybody to make sure that they have somebody who that they can talk to about accounts that can keep them right, because it can be very costly if you don't do it right, and it's very, very stressful, and you can't take the time out of your business to cope with that whenever you have an inspection, because you have to send them, you know, maybe 2 years worth or 3 years worth of your accounts, so you'll have to send them copies or make copies and keep originals, and it just turns into a whole kerfuffle. So I would advise that you have somebody doing your accounts, or that you really understand what you're doing, because revenue and customs are ruthless when it comes to your accounts, because it's all about your income and paying your taxes. And I was also VAT registered for a lot of years, and you know, with making tax digital now coming in, you know, very, very, very soon, like here, then this is something people will have to do. Everything's going to be in real time. Universal credits are in real time. It affects a lot of families, and we really need to know what we're doing. But thank you so much. That was brilliant.
No problem. And Sinead, just on that, when you're saying the Making Tax Digital really does come in April 23, and that will be quarterly returns, so you'll have no choice but to stay on top of everything and getting that done. So yeah, make a decision wisely.
No excuse, because there's some really good software programs out there that you know you can work with on your phone and on your computer and keep up to date regularly. And it's not like the old days where we had ledger books. You know, although I do remember doing that too at one stage.
But you know yourself, Sinead, it's really just habits. Doing it once a week, or I know you go in nearly every day and do yours and stuff.
Books every morning, 9 o'clock. Check it's synced to the bank account, so if anything's come in and gone out, it's fresh in my mind what was bought or what was purchased or what's come in. I'm very lucky that I work with primarily Stripe, so it sends me a report which, you know, shows me all the sales plus the fees or anything like that, and that can all be, you know, ticked off. And so I think it's important to do that, and because a lot of those systems do a lot of the work for you, even though they could be an expense that you didn't bargain for. Plus, again, you're handing it over to a bookkeeper to check. You've maybe held yourself accountable, but you've covered your back.
Yeah,
you've been responsible. We all have to do our due diligence when it comes to doing accounts.
And the biggest thing with HMRC, and I couldn't stress that enough, is I don't like the phrase, but they don't count ignorance as an excuse. So, you know, if you start to get penalties and things because you've done something wrong or you've missed payment deadlines, anything like that, they don't care. You know, it's just they think as a business owner you should know, or you should have known to at least ask these questions and things. So make sure that you just learn as much as possible.
Thank you so much, Ciara.
You're welcome. Thank you.